Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the weekly time frame, where we're looking for an impulse 1, 2, 3, 4, 5, seeing at least one more push to the upside above all-time high. The common target for your wave 4 is between the 236 and the 0.5 Fibonacci, taken from the low to the high of wave 3, giving you a target between 57.1k and 42.8k. However, a wave 4 of a higher degree, the yellow wave 4, does tend to retrace to the wave 4 price action of a lower degree, the green wave 4, which is a guideline in Elliott waves, giving you a bit of a target between 49.2k and 39k, meaning the 382 to the 05 area is the most interesting area for this wave 4. The invalidation for this scenario is price moving to the downside, touching the 0.618 at 37.7k. Inside this wave 4, we are then looking for a 3-wave corrective structure to the downside. As wave 2 was very shallow and also quite long in time, the probabilities do increase for this wave 4 to be a bit shorter in time and deep. Deep meaning retracing to that 38205 area, which is possible with the zigzag on the lower time frames, a 535 ABC. The most common target area for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the start to the end of A to the end of wave B, giving you a target area between 54.6k and 50.5k, with the 1.618 at 43.9k being an extension target for a zigzag. The most bearish scenario is going to be an impulse to the downside, where this is a wave 1, 2 working on a bigger wave 3 to the downside to much lower prices. In this case, the 1.618 would be a minimum target at 49.3k, but likely a wave 3 is going to extend to much deeper prices, and preferably you at least want to take this low over here, because if you take out 38.5k, you also hit the invalidation for the bullish weekly scenario, the 0.618 at 37.7k pretty much, right? So you do want to see more downside for this wave 3 or this bigger impulse 1, 2, 3, 4, 5 to the downside, invalidating the bullish weekly scenario. But at the moment, this scenario does not have the highest probability. Wave 2 here hit the 886 Fibonacci, taken from the start to the end of wave 1, and the 886 is a very rare target for a wave 2, but is common for a wave B or a wave X, which therefore increases the probabilities that any move to the downside is a wave C or Y, which means part of a corrective structure, which therefore increases the probabilities to then sooner or later turn around and continue to trend to the upside to take the highs. Looking at some other forms of technical analysis, we have a weekly gap on the chart. Now, generally when testing a gap for the first time, you want to see it act as support, which happened here, moving up, came back down once again, testing it for a second time. The more often you test a gap, the weaker it becomes, the higher the probabilities to fill the gap. And if you close daily or weekly candles inside the gap, the probabilities increase to fill the gap. Now, the low of the gap is 53k, which is also the order block here on a weekly time frame. On the weekly time frame, we also have a volume profile that you can take from this range here that creates the value area high, the point of control, and the value area low that you see on my chart, the blue, red, and blue line. This is a very nicely respected volume profile. Over here we had resistance, moving to the value area high, resistance, support, and eventually breaking towards the upside. The value area high now can act as important support, 49.5k. Generally, the area between 50.5k and 48.5k is important support on the chart. If we fail to hold this area, then dipping below the value area high, retesting it, and then breaking the structure would increase the probabilities to move to the point of control. And the point of control at 38.7k is also very close to the invalidation of the bullish impulsive scenario 1, 2, 3, 4, 5. Remember, so preferably price holds this area, but we'll have to wait and see how price reacts if it gets there. Then finally, we have the channel taken from the low to the first time touching 30k. Also nicely respected, ranging on top of the midline, then hitting the top midline support, breaking out support on the top line, and then eventually we closed a weekly candle inside the channel, increasing the probabilities for price to move towards the midline. It's doing a good job trying to get there. The midline at the moment is sitting at about 50.8k. Of course, next week, if this week ends, it's going to be 51.5k as the midline is moving towards the upside, of course, but it just is another area of interest, an area of confluence, together with all of the other confluences in that area. Since price has made the high at 63.8k, we have only seen bearish CVD divergences as price is moving towards the downside, which shows that market long orders are being absorbed by limit short positions, pushing price to the downside. Bearish CVDs here close to the high, another one over here after we changed the market structure taking this low, and now once again more locally we have some bearish CVDs on the chart. You can see over here we have with the green order block lower high in price, higher high on the CVD, but even more locally just in this small range on the 15-minute time frame you can see that we have red candles with a CVD moving to the upside, which is also a bearish CVD divergence. So if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities remain higher for the bullish scenario, looking for a wave 4 and at least one more push to the upside in a wave 5. Bearish scenarios only really become relevant if we start to move below 40k. On the daily time frame, therefore, the probabilities are higher for a zigzag scenario, ABC 3-wave structure, compared to a bearish impulsive scenario for much lower prices. Locally, we have some bearish CVDs, so therefore generally we are still looking for price to move to the downside. Also on a daily, also on a local time frame, we have some interesting support to the downside as well. Here we have a blue box, 51.6, 51.9k, below this 49.1, 49.7k, and then we're going to the mid 40s, 44.6 to 45.2k. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.